Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our next community bank presentation. The next presentation comes from Endeavor Bancorp. And before I introduce our speakers, a few points to note. Please submit your questions in the question box to the left of the slides. And if you're interested in scheduling a meeting with Endeavor, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Dan Yates. He's the Chief Executive Officer, and Stephen Sefton. He's the President of Endeavor Bancorp, which trades on the OTCQX Best Market under the symbol EDVR. Welcome, Dan and Steve.
Thank you. It's a pleasure to be here. My name is Dan Yates, and introduce my partner.
And I'm Steve Sefton, President of Endeavor Bank.
So it's a pleasure to introduce our bank. Endeavor Bank was started in 2018. We were the first new bank in San Diego County in over a decade, third in the state of California. The bank last year formed a holding company, which is now Endeavor Bancorp, which is how we trade under the EDVR symbol. Although we're headquartered in San Diego, we actually consider our footprint to be Southern California. So we have clients in San Diego County, Los Angeles, Orange, and Inland Empire. And our real focus is what we refer to as consultative banking. And we operate the bank more like a management consulting firm in some respects, where we spend a fair amount of our time whiteboarding with business owners to solve their critical issues and help them come up with good ideas to scale their company. Nearly 100% of our resources are focused in our footprint. The exception might be the occasional loan outside of Southern California, which ties back to a business owner. So we focus on the local decision making, having a local board that's very active in our community. All of our founders, which numbered over 50, are local San Diego natives and a few in Los Angeles. And the majority of our shareholders are local business owners. Relationships primarily are C&I companies here in Southern California. And we just celebrated our 5th year in business with over $480 million in total assets as of year end. Our management team has worked together for more than 5 years. The bank was in formation for about 2. Steve Sefton and myself go back over 3 decades, dating back to our time in Los Angeles working for a local business bank. We recently introduced Julie Glantz as our CFO, and Julie and I had the pleasure of working together at a previous bank that I co-founded and later was led by Steve Sefton. So a little about our business banking model. As I mentioned, we're primarily C&I focused. Very much DDA driven. In the recent past, we had as much as 60% of our deposits in DDA. As rates have increased, we've seen that shrink a bit to 48%. But the majority of our clients are operating accounts, basically checking accounts for business owners. In terms of our ownership, the board and the management team has about 11% of the stock. And we have about 600 shareholders plus, and the majority of them I would characterize as owners of closely held companies. The average investment was just north of $50,000. The minimum to invest in the stock was $25,000 when we launched, and we raised over $26 million, which we'll talk about shortly. And again, our approach is to be a consultative banker. Here you can see our total assets have increased steadily since launch. We ended the year at $480 million in total assets, 78% in loans. And of course, right now the focus in the market is on liquidity. About 90 million of our assets are invested in overnight cash. And we have significant unutilized lines of credit with the Federal Home Loan Bank north of 100 million. In terms of bonds, we have about 7 million in bonds, and really have not built the portfolio to any extent, which has been viewed as somewhat of a favorable outcome in today's market. Here you can see our loan portfolio, and I would just note that the light blue represents PPP loans. We originated over $300 million in PPP loans between the various rounds. So at the year-end marks, you can see where those portfolios stood. If you remove the PPP from the loan book, you'll see that core loans have grown steadily since the beginning of the bank, growing approximately $100 million a year. On the right side of this slide, you can see the composition of the portfolio. Really, I focus primarily on the C&I and owner-user, which really are the clients that we're doing business with. And that has historically been about 60 to 65% of our total loan portfolio. When you look at the investor real estate, many of those loans are tied to a business owner. And within that portfolio, roughly 7% would represent office today, which I'll show you in the next slide. Here we drill down into the core loan portfolio. Again, owner-occupied and commercial real estate are shown in the largest blocks, with investor real estate in the smaller portion. The average loan to value on our entire real estate portfolio is 57.3 in the aggregate. For the next slide, we want to focus on our deposit composition. And again, steady growth since launch, roughly 48% here in DDA, and you can see the balance is interest bearing. We offer the IntraFi account, which has been well received, particularly in the last few weeks. So currently 44% of our deposit relationships that are $1 million or above are held in the IntraFi cash service accounts. We have about 285 personal client relationships that averaged 348,000. Then we have 1,174 business relationships with an average balance of 272,000. The average deposit cost is 46 basis points as of year end, and our average weighted money market and savings account rate at year end was 2.5%. The bank's credit portfolio has performed well over time. We increased reserves at year end, primarily with the Q factors, to boost that to 1.52. No individual credit concerns. We just felt it was prudent to look forward at the recessionary concerns that we've seen mentioned in the economy. And so we feel comfortable that the bank is well reserved for any potential credit concerns. Here you can see our pre-tax income. We've had some noise in the income statement over the last couple of years. We had a deferred tax credit that we took in June of last year, which boosted bottom line income. And of course, we had the PPP income going back over the last couple of years. So when you remove all that noise, the growth in core income has been steady since really the last 2 years as we came out of our startup period. The focus on the right column is on the net interest margin. As you can see, in the third and fourth quarters, it has been holding up well. And that will be a challenge, as we all know, as we look forward to the next year. As I mentioned, our fast growth has required that we return to the market for additional capital. We did a secondary raise in March of 2020. We don't really consider the PPP program a capital raise, but it was unexpected in that it dropped over $10 million in fee income that we had not projected when we launched the bank. And then last year, when we formed the holding company, we raised $15 million in sub-debt, which lowered our cost of capital. Our strategic goals are to become the preeminent community business bank here in Southern California. We want to increase our visibility and outreach to our shareholders. We're looking at managing our ROA to 1% and ROE to 10% and our efficiency ratio to below 60% in the year ahead. Our balance sheet favors our deposit growth over loans in the budget ahead, and we're managing to an 80% loan to deposit ratio. Our goal is to outperform the market with respect to deposit costs. It's interesting, we did this slide yesterday when our stock price dropped along with the whole sector down to $9.29. Today it actually finished at $10.25. So the first four numbers here were based on last night's closing stock price. And as you can see, our price to tangible book has dropped to below 1, which some might consider this a very good value stock, given the bank's performance. And with that, I'm going to now turn it over to Steve Sefton, who will be taking questions from the audience.
Well, thank you, Dan. The first question, I think, is being asked from the perspective of a depositor. Are my deposits secure in Endeavor Bank? The first thing I would say is the performance. What Dan described as a very strong performing bank over since inception. That's the first thing I would say. But then the second, and it connects to another question about our bond portfolio and mark-to-market unrealized losses. We virtually have no bond portfolio. I think Dan mentioned that we have about $7 million in bonds, but with liquidity approaching $100 million in cash, mostly in our account at the Federal Reserve in Fed funds, we virtually have no bond portfolio. So without a mark-to-market and with the performance that we have, that really creates a very safe environment for our deposits. In addition to that, Dan mentioned a screen with the IntraFi account, ICS, where we can provide 100% FDIC insurance by diversifying the depositor's deposit across the country in $250,000 increments. So we put all those things together, and our deposit base has shown that they're very secure with the bank to date, and we think it will be going forward. Dan, do you want to add anything to that?
Just that historically, the ICS product was not well utilized until recently. With all the news about banks in the country, many of our clients have opted to move into that product, and we think that's good for the bank as well as for the client, because it reduces any potential for, or certainly reduces the potential for volatility in our larger relationships.
So the next question is about the stock price. You were speaking faster at the end. Maybe they didn't catch that it's really, we think, sector driven. We don't think there's any aspects in the bank that would cause the stock price to be driven down, but it has gone down from, was trading in the 11s, just below $12 a share a few weeks ago, and now it got down below $9 a share, but as Dan said, it's back up again. There's just not a lot of volume of trades in our stock. It's very closely held, and our stockholders tend to hold on to it. Dan, you have anything to add to that one?
Now, just to echo what you're saying, it only takes a few trades in our stock at a low volume to make the stock move around quite a bit. And so I think this week we saw a handful of trades, and of course the stock moved downward. But then today it has now started to echo the other banks in the sector. I think we saw a good bounce across at least the California banks that I monitor. We were included in that uptick today.
So everybody's focused on the bond portfolio. Another question about bonds. As we have said a couple times, we really don't have any bond portfolio to speak of. So there's no mark to market to speak of. What is it? Our total mark to market, Dan, is about 400,000.
Closer to 500 if we were to sell the bonds, but we'd have no reason to do that.
So, question about deposit losses, runs on deposits. We're just not seeing any movement of that kind, Dan. Any comments on our deposit stability?
I think as we've all read, most of the large banks in the country are seeing deposits flow into them. Among the community banks, and including many of our peers, and certainly our experience, is we're not seeing runoff, but we are occasionally getting some nice new relationships. It's been my preference to really encourage clients of other banks that are in the news to talk to them about IntraFi, and we're trying to be helpful to those clients, not poach clients at a time like this. But when you're helpful, sometimes the response is, I'd like to open an account with your bank. So we are seeing some nice new relationships come in.
Here's a question that we're hearing a lot in the news about uninsured deposits. There was a slide in the deck wanting to know what our uninsured deposit outlook looks like. the kind of model that we're in lends itself to larger depositors. We're banking companies that tend to keep, I call it their accumulation of working capital is what our deposits are mainly built upon from our corporate customers. Those tend to be larger. They tend to be more than $250,000. Dan, what was the percentage of our over $1 million that are in the IntraFi product? Is it over 40%?
Correct, yeah.
So,
and historically in our call report, you would see our uninsured deposits run anywhere from the high 70% to the low 80% range. And now with the movement to IntraFi, that is coming down. But historically, I think most business banks will tend to find that those are very relationship-driven deposits, although larger in size. Until recently, that was not a newsworthy item is to focus on your uninsured. But with the movement to IntraFi, I feel confident that any clients that might have been concerned about FDIC insurance have an outlet to alleviate that concern.
On the next call report, that percentage is going to be very different than 1231 because of the migration to IntraFi. We're helping our clients. We're encouraging clients to do that. Question about stock ownership. One thing we didn't mention is that when in the first and second capital raise for the common stock capital raises, we did two, we didn't hire an investment banker and we didn't hire a money raiser. It was really Dan, myself, our board, some organizers pounding the phones in our local market, raising stock among the local business communities. And as Dan said, we have over 600, pretty much over 600, almost exclusively local business owners as our stockholders, at least in the initial two capital raises. But the question is about Dan, your and my and management's ownership percentage. If I recall, you and I and the Matt Ratner, the chairman of the board, are three of the five largest stockholders in the bank. So we are definitely personally aligned. Our interests are aligned with stockholders and with clients of the bank for the success of this bank and for taking prudent risk to not get out over our skis. Dan, any comments in that regard?
Well, certainly that is true. I would just add, as far as our shareholder base, it's also the engine of growth. Most of our business since launch has come from the shareholders. They both send their own business to the bank, but the CEOs, which are the business owners that occupy most of our shareholder base, tend to have peers that they're very close to. And so when they're satisfied with the bank, they tend to refer business to us. Not to say that our relationship management team isn't out there, daily working those relationships, which they are, but we have seen a very steady stream of business come in from over 600 shareholders that attend our what we call them owner events. We're doing one Friday as an example where we'll have a panel talking about topics of interest. And usually when we come out of these meetings, clients are usually in tow with referrals for the bank. So we try to do those every other month. And we mix it up as far as the topics, but our shareholder base has been really our strength for our economic engine to drive Endeavor Bank.
Well, that wraps up all the questions. I don't have anything else to add. Dan, do you want to say anything in closing?
Just that we appreciate your interest in the bank and we look forward to scheduling any one-on-one calls if you'd like to do a